let's start with just some brief introductions so that everybody knows one another and you get a chance to know everybody here. Christian, let's just start with you. Just a brief introduction of yourself and the company, please.
So my name is Christian Zilly. I'm a co-founder and a managing partner of Waterway Investments. We were created 11 years ago and are focusing on advising international and domestic clients on so-called non-core markets, be it for transactions, for capital solutions, and for debt advisory.
Super, thanks very much. Philipp.
My name is Philipp Ellebracht. I'm group head of capital within CORESTATE here in Germany. CORESTATE is a listed firm in Frankfurt with approximately 28 billion assets under management. In a number of different sectors we are active. Predominantly, we are active in residential, which also includes student housing or micro-living, etc. And but we are also doing, apologies for that, we are also doing obviously offices, retail concepts and logistics.
Perfect, thanks very much. Holger.
I am a relationship manager and originator for international clients with Berlin Hub, who is a commercial real estate financing provider within the German Sparkassengruppe. We do have a loan book of 24 billion right now. Thankfully, it's growing and producing lending of around 6 billion each year. Of course, we lend in Germany, but in addition to that, we provide loans in France, Benelux, and Poland. And last but not least, we have been quite active, and I think one of the leading providers of green covered bonds and green unsecured bonds. And it's good to see how that now has got some more traction within and across the industry.
Great, thanks very much, Holger. Christian.
Good morning, everybody. I'm Christian Scheuerl, partner at Antoni Real Asset. We are a development and real estate consulting firm with a focus on new living concepts. By the way, Thomas, I like the term beds and sheds. Very good thing. We cater for customers all over Europe with a focus on UK and obviously Germany. We're based in Hamburg and helping our clients to move forward in these niche sectors that aren't so niche anymore.
Yeah, and it's been really interesting to see how some of those things that were regarded as niche sectors have grown, particularly over the last 12 months in terms of at least investor focus. Holger, let's just start with you. I wanted to pick up a little bit on the sort of some of the broader macro factors influencing Germany and the German market. So how are you seeing, I suppose, the economic factors and things like interest rates, like Thomas mentioned?
Yeah, that's a very current and very interesting development indeed. Richard, and particularly those clients who are now just shortly before closing in financings are looking very carefully on interest rates. We have seen over the last couple of weeks a spike of 20 bips, and everyone got excited when the 10-year swap turned actually first time for a long time into positive territory. But I think it's fair to say that transactions still go ahead and investors are simply adjusting their business plans to that. So no one has actually pulled out on a current financing. Whether this is going to continue, it's very difficult to say because some of the economists are of the view that it's rather technical, sort of rebouncing inflation as we are coming hopefully out of COVID lockdowns anytime soon. But hardly anyone is arguing that is a sort of general turnaround of interest rates. And I mean, we got used to the fact that we have negative interest rates, but I think that's a very friendly and early reminder that we are still in a very extraordinary situation in terms of cost of financing. So I wouldn't necessarily base my long-term expectation on negative rates and very low financing costs.
No, okay, good. And Christian Zilly, I just wanted to pick up with you. It's an election year as well in Germany. Is there anything that international investors should be thinking about in terms of that, or is it sort of irrespective of what happens in the election, Germany will sail, proudly on? How do you see that?
Yeah, we have the elections coming up in September, and we have a few state elections coming up this weekend, actually. So it will be a very important election year in Germany. Well, if you have asked me like 6 months ago, the picture was pretty clear how that was going to turn out. Right now, there is a bit of vaccination trouble going on. People perceive the speed of vaccination as not fast enough in Germany. Personally, I think yes, the politicians could have done better, but let's speak again in 8 weeks' time or 10 weeks' time. Then I think so many people will be vaccinated that it will be almost forgotten as an issue. And probably this will lift also the mood towards the elections in September. Yeah, I mean, everybody in business, I think, hopes that Mr. Laschet will make the race, maybe with a Green coalition partner, maybe with a Liberal Party in Germany. And I think the elections are not that much in danger in this regard.
Richard, may I add to this one comment? Because I think if you are an international investor and looking to Germany, the influence of the election, I think there's one fundamental point to monitor, which is our German, let's say, insolvency law. And at the moment, it looks like on a quarterly or semi-annually basis, this law will be paused and not executed. So we have at the moment no clear view about the SMEs in Germany, how many of them will file insolvency. And my gut feeling tells me a little bit that this particular law will be paused until after the election. So that has an impact clearly on your underwriting and your view about Germany's economy. If you only know how many of those companies will going to be or to file insolvency in the future, if you only have a clear view on this in, let's say, Q1 next year. So I'm a little bit in between, but I think that will have an impact on your tenant base, obviously, if you're an investor.
No, that's Richard, there's one asset class I would sort of raise my finger in this context, and it is residential, keeping in mind that a very large proportion of the population is actually renting, and rental controls is my gut feeling going to stay in one shape or the other. Whether it's going to be so severe like in Berlin, that remains to be seen. But they are not going to get away. That is for sure. They are simply too popular with the electorate.
The number at this point was also raised last year from a lot of every Asian investor we discussed on. They were all asking what's going on there, can we still invest? And there was an uncertainty about that, and and I fully agree with Christian. If as long as this is a stable coalition which will win in September, I think the big risk is we have a further push into the far right or far left, and that's a big risk, which would also have a significant impact on our in general trust into Germany, but also especially in our investment class. I hope that it won't happen, so fingers crossed. But yes, I agree. Resi will be under discussion further if the wrong coalition will be on board. But the other asset types are still, it's a transparent market here.
Okay, great. And just in terms of the perception of Germany within a wider European context, Philipp, obviously you're investing as CORESTATE across Europe. So how do you see Germany within that sort of European context? Do you still see it as a safe haven? Because obviously I've had discussions with the Nordics who are claiming that they are the safe haven now, as Thomas mentioned that in terms of data centers. But what's your sense of the German market within that European sort of context?
Yeah, I think Germany is and remains to be a safe haven for sure. At the beginning, I want really to point this out. It really depends on, of course, the Nordic region are fundamentally strong, and you can also say that they are kind of a safe haven. But if it comes to the overall market size and liquidity, then obviously Germany plays a stronger role in the overall investment universe. I think it will be an interesting year because on the one hand, Germany will remain a safe haven, but on the other hand, you can see that some countries with a faster vaccination policy might open up their investment markets earlier. and will benefit from that in particular. So it could lead to opportunities where you can see a faster, let's say, recovery in some of the real estate sectors because of a vaccination policy. So that makes the safe haven a little bit relative, but I think if you look at the fundamental data, Germany is well positioned. As mentioned earlier, if you go in residential, then obviously you will have a secure, diversified cash flow. And I still strongly believe that Germany has more opportunities and options to stimulate the economy if it's necessary. But it looks at the moment like it will be from an economic perspective and growth perspective a better year than last year, which makes me feel positive.
Okay, good.
Just add something.
Yeah, absolutely, yeah.
Yes, I wanted to add regarding the next few months. So once we have a certain amount of vaccination rate achieved, I think there will be quite a boost for the German economy. If you look at economic data from IFO and other institutes, it's obvious that the industrial sector is actually doing quite well, and everything that is connected, advising the industrial sector, even the automotive companies. Volkswagen surpassed Tesla by far in the fourth quarter of 2020, and electric vehicles sold in Germany with 200,000 electric vehicles sold only in the fourth quarter of last year, based on the ID.4, ID.3, Porsche Taycan, and Audi e-tron basis. Since the Asian countries have come back so strongly, the German export sector is also very strong again. So they have a bifurcation of the German economy. Everything that is related to automotive and industrial sector is doing pretty well, almost at pre-COVID levels. Everything that is related to leisure, travel, gastronomy is obviously still down. In addition to that, a couple of months ago, the Handelsblatt put up a number of, I think, 200 billion euros that consumers saved during the first COVID phase. And it is expected that this money is being retransferred in the economy once the people don't have to worry so much anymore. And the same applies for the US, for example, where this number is, I think, was about $1 trillion. So there will be a huge cash re-injection in the largest economies once COVID is over. And this will provide for quite a boom for a year or two or so once the uncertainty is over.
So that's interesting. That saving rates and the potential for a pent up demand and a boom is interesting, Christian. Christian Schueller, just coming to you, we discussed a little bit there the residential side, and obviously you're active in that side as well as the sort of student housing. How do you see that, the impact on that sector? Let's look at that sector particularly. I suppose both short term, but also medium and longer term prospects in Germany.
May you allow me one remark to Holger and the fundamental data, especially with regards to the interest rates. I just read a couple of days ago that the government bonds for Greece are also trading negative right now. And if we think about this and the things that Christian already said with regards to how much impact the leisure and tourism industry in these countries, like especially Greece, has, one could just question the real value of these fundamental data, because I think we all agree that Greece right now probably wouldn't be the safe haven to invest. But on the other hand, the numbers in a way speak for themselves. So the market deems Greece to be a good place to invest, even with negative interest rates right now. So maybe Holger can comment on that in a second. But coming back to your original question, yes, student accommodation certainly has taken a hit in the last year, especially because of universities and international programs more or less being closed down. There is no need to rent a student apartment if you're not in class, if you can't go out with your friends, if you are simply sitting in your 20 square meter room. And I think 80% of all students would agree that it's better to sit at home in your old room with your parents probably, and spend the time with the family and people you are still allowed to spend time with, than sitting alone in your 20 square meter box without getting a beer in the evening and going to class during the day. So COVID certainly was a very relevant factor on that. However, I think we are very lucky in this sector in Germany that most of the investors there, and I think Philipp can agree on that, they don't invest opportunistically there. So they've taken a deep dive on the fundamental data on student accommodation, and yes, right now the occupancy rate and the annual cash flow is probably not meeting the original underwritings and the business plans, but that is certainly going to change. So as long as we have strong institutional investors sticking to the asset class, and that's how it looks like right now, there's no fear that a huge number of these assets are going to get into a fire sale or things like that, because the investors, they are not happy about it, but they certainly see the upside, and even on the contrary, they see huge opportunities right now, especially with smaller investors not being able to meet the loan payments and being potentially forced to sell, even or especially if it comes to apartment buildings and also service apartment buildings that are finished right now and coming to market right now. So you start with zero occupancy and with a prospect of staying at that level for the next 3 to 5 months. And I think talking to banks about this kind of future for the next half a year or so, people are more likely to say, okay, let's close this position and find a long-term investor, even with a discount.
Okay, I'll come back to you in a minute, Holger, on some of the finance aspects, but Philipp, just pick up on that point. Obviously, you're investing both in Germany, but also across Europe in this sector. So how are you seeing that, I suppose, from a demand and from an investment perspective?
I think just focusing at the moment on student only, what was a little bit, I wouldn't call it surprise, but a learning out of the crisis was that we had relatively high levels of stability within our portfolio and on the occupancy side, which makes you think, why is that? Yeah? And if you look at, in particular, student a little bit from another perspective, usually in terms of a crisis and where you have automatization in the industry, education and university degrees will have an impact on whether you find a job in the future or not. And from that perspective, obviously, young people in particular think twice whether they start their job immediately or go to university. So from that perspective, on the midterm to long term, we expect that even in a crisis, the demand for student housing will be higher than it was probably before because of the turbulences which we have. Yeah? And the other thing, which is, I think, a fundamental trend, is that student apartments as a market in itself are a long-term trend, and people want to live in kind of co-communities and want to experience this rather than having a single flat in a standard residential building. The other thing is just picking up, if we are talking about micro-living, is clearly on service apartments. And here, if you compare service apartments in particular with hotels, the occupancy rate was also much higher than on the hotel rate. And the reason for that is that in the service apartment level, in the service apartments sector, you clearly have a longer lease duration than with a hotel. You don't stay necessarily only for a month, for a day or two, but you usually stay for a month, 2 or 3, subject to how your business life is, and that brings you a little bit better stability throughout a crisis in your portfolio from a cash flow perspective.
Holger, just come back a little bit on, I suppose, the point from Christian there on the financing side, but also just more broadly in terms of finance in the market. What are you seeing? Are you seeing financing beginning to be more conservative, pulling away from kind of non-core assets? What's I suppose, what is being financed and what isn't at the moment, Holger?
That's a very fair question, Richard. Interestingly, and against expectations I would have had back in March last year, the financing market has actually performed quite stable. Of course, we all had our sort of 4 to 6 weeks silence after the lockdowns and COVID kicked in, but then the investment market, at least the core segment, in particular resi and logistic, kicked back to life, and so did banks. We have had a very good year in 2020 with 5.5 billion new production in loans. And lucky enough, we have not been a very active lender into the hotel sector. So that has helped us to avoid provisioning for bad debt. That's I think fair to say. Going forward, the pipeline is still very active. Of course, we are getting asked whether there is a blacklist, whether we do hotels, whether we do retail. But I always say the banks are the last ones in the line to pick and choose from what investors have decided to invest in. And it's fair to say that a lot of investors are simply not looking at those asset classes and hence do not ask for financing on that. Apart from that, I have the feeling that at the moment it's more buying opportunity for those who are brave enough to still take a long-term view on the hotel sector, which I think it's a very prudent way to do that is going to kick back at some point. And those expert investors are saying they're now getting actually assets which haven't been out for sale for a very long time. So it's more an opportunity and a chance than a risk, I would think.
Okay, good. And Christian, from Waterway's perspective, what have you been seeing at the moment in the market? Have you been seeing, finance broadly available, whether that's for, core or whether it's for B and D cities, B, C and D cities? What are you seeing in the market at the moment?
There was some movement, obviously. And from the projects we advised on over the past couple of months, we see pretty much that German Pfandbrief banks haven't lent so much as in the years before, and that alternative lenders were pretty quick in entering the German market and have a quite sizable loan book right now. Lenders like Anglo-Saxon insurance companies, private equity funds, etc., but also German institutional companies that have quite a number of vehicles in the debt sector right now. On the other side, we see that even retail investments are being financed if the whole concept is good. But it's more a play for local banks now. And we also construct a consortia of local banks. For example, here in the Rhine-Main region, where a loan must be refinanced around 100-something million euros for a retail complex. We see that local banks, Sparkassen, savings banks, banks from the cooperative sector, Volksbanken, they work together and put up a loan structure that allows our clients to refinance the whole construct. And so on the one hand, we see the international lenders. On the other side, we see even more regional lenders jumping into the vacant spot.
And Christian, by the sounds of it, you've got a slightly more positive view on retail than a number of other people in the market. Am I right in getting that through this? Or
yes, in general, yes. It depends, obviously, but we don't see the end of retail. And as I said before, there's so much pent-up demand. I think once the vaccinations are through and the situation stabilizes, that people will also run over the shopping centers all over the country. And I think the same applies for hotels, actually. Last year we saw, after the first lockdown, when that ended in May or end of May, the German hotels had occupancy rates around 80% or so, inner city tourist and business hotels. And we expect this number to come back.
I mean, Thomas, you mentioned there are a number of different scenarios in terms of office. Do you, out of those, are there some that you believe more than others? What's your kind of personal view on them? Be interesting just to get, because there's a lot of discussion around the future of office more widely.
I hear from a lot of investors that the flight to quality is there and that the office is not dead. As we just heard from hotel and retail, the office is definitely not dead. And if you look at the German market especially, the good news is we don't have such an vacancy rates like in other territories. So if you look at the rent increases of the last 3 to 5 years, we had significant rent increases. So if the rent level now stabilizes a bit or comes down slightly on the rent side, it's not a disaster if you compare it to the last 5 years we had. And there's, as I said, vacancy, and it's the fourth cycle I'm in. At the end, it was always a competition between old buildings compared to new buildings. So I think the older buildings from the 60s and 70s, we still have a lot in Germany that might face some challenges and they have to be renovated into the new layout we use. And of course, also on the occupier side, ESG is a big topic. So also my personal view is where would I invest? I think to buy older buildings, renovate them, pimp them up into an ESG compliant level, which is not so difficult. If you can even create Article 9 products, dark green products under EU taxonomy. If you buy all the building, renovate them based, of course, on the taxonomy, and find new layouts, especially for office space. So that's where I feel comfortable. And the newer buildings, which were constructed the last, I would say, 5 years, are pretty up to speed. But still, there's always something to do in an ESG context. You have to think about your energy you are buying into these buildings, etc. But then we are still there, and people are keen to go back to the office. That's what I hear from my teams and from several clients. We are all keen to go back. We don't want to sit there 5 days a week just to work. It's more about communication. That's something we have to adjust, especially in the older part of the buildings, but it's the biggest sector in Germany. If you look at the landscape of how old the buildings are. So there's so many old buildings, 50s, 60s, 70s, which have to be recycled in the next near future. And that's an opportunity, also an investment opportunity.
Does anybody else want to pick up that point around how they see the future of the office? Is anybody buying into the idea that there will be less office space, or office space will have to be majorly adjusted? Because obviously that discussion's been kind of ongoing and live over the last 12 months, really. I don't know, Philipp, whether you've got a view on that, or Holger.
Yeah, on the office side, I'm, let's say, I have got two hearts in my soul. Yeah, one is telling me clearly that we have too many negative views about the future of offices in the public, and to choose is usually in the middle, rather than only on the negative side. If you look now at new concepts, I think you can raise the questions whether something like COVID will lead to more individual, smaller office rooms with less people. On the one hand side, that could be a logical thought if you think about the pace of when people can get infected by each other. On the other hand, we all realize that there is a big trend about co-working, and that people want to have an opportunity to go to a space for work, which is kind of exciting. And if you spend a lot of your lifetime in an office, you want to have some amenities like any services around your life, that you organize yourself a little bit better. Which brings me to the conclusion that offices will remain and will be also in the future a key component of creating creativity within an organization, which is essential to survive, but clearly maybe in a slightly adjusted format than what we have expected previous or prior to crisis.
Okay, good. And Holger?
I also agree that calling the office or the end of the office is absolutely premature. Maybe it's good to sort of just distinguish between what is affecting the discussion right now. I mean, if the economy cools down at some point, demand for office space is going to follow. That is always a cycle we have seen in the past. And as we are coming out on a very, very strong cycle, it's absolutely normal to expect some cooling down going forward. But what has also fundamentally shifted, I think, is what users actually need to do in the office. I believe with having now been forced of testing and living with remote work, that is going to stay, and the office becomes a place of collaboration. And I don't think that means chatting across a row of very dense desks. This actually means collaboration space. And it's probably strange to hear from a banker, but having a creative space where you actually can break off this sort of traditional pattern, that is going something which is, I would expect for the future, going to play a very, very strong role.
Christian, Thomas mentioned there in the slides as well that one of the sides of that may well be differences in terms of demand for residential, whether that's larger apartments with an additional room that can be an office, maybe more of a focus on suburban rather than urban. What's your sense of that? Are you seeing any of those changes or adjustments in terms of demand?
Other than in the office sector, where we directly see what changes are ahead, and I always like to look at what deals are happening right now. And just the other day, I think IWC announced that they had signed 2 major leases or service agreements with very big firms who are going to rent massive space in these co-working areas in the future. Well, we haven't seen these deals in co-living or in serviced apartments yet, but that's more due to the fact that we don't have these kind of service providers right now. If you look at the co-working market, co-living market in Germany, for example, many operators and quite a few investors are talking about that co-living is going to be the flavor of the next years. And I would say, yes, there is certainly room for a new kind of living. But as it was for student accommodation 7 years ago, if you don't have enough product on the market, lots of investors are a bit hesitant to say, well, let's invest because we like the asset class. If you're not able to have enough overall transactions to be able to divest in a shorter period of time, if necessary. So we're going to see a steady growth until we reach a level where larger portfolios are going to trade, and only then we're able to say whether this is a real asset class going forward with special investment vehicles and things like that. But right now, all operators who are happy to call themselves a market leader with 500 or 600 beds in this co-living sector. I mean, it's going to shape the industry right now, but we are not able to talk about real trends right now since it's just too vague what's going to happen in the future. We are this class is still very much in a startup phase where lots of intelligent people are working on new ideas, but we just have to see how the market adapts to it, and it's too early to say.
Okay, good. And Thomas, certainly Germany with its demographics, you would think ought to be, a growth story there in terms of senior living. But are there challenges for that? I suppose what's holding that sector back in Germany, and where do you see the growth?
If you look at the demographics, there is a growing demand and need from the occupier side. I think some of the institutional investors, some of the capital is a bit hesitant, as we had bad experience in the past, more on the operator side, that there were challenges and restructurings and insolvencies around operators. That's my understanding, that I would say half of the institutional investors say, no, we don't go into operated residential. The same I hear sometimes also around micro living, etc. Depends on if it's commercial or if you have an operator or not. So that's the main concern I hear. But a lot of investors see the big mega trend, the demographics, and clearly invest into the sector. And also international capital, especially Asian capital, is more and more looking at this platform with a platform idea into this, want to grow this business. It's a bit early stage, but or some big US players are already active in the market. So there is enough capital looking into this sector, and is not is fine with the operated residential. I would say it's some of them also want to have a piece in the operator, to have transparency, but also the typical German investor, I would say half of them are looking at that if the operator is fine and has a track record to go on that. And in I would say in senior living we have a bit more of an history on the operating side compared to the micro and student housing, which is a newer asset class to especially German investors.
And just in terms of the locations for anybody, do we think that there will be more of a drive towards smaller cities rather than the kind of top 7, because of the ability to be able to maybe have a larger space if you're, for the same amount of money, if you're living there, and because people may be, more willing to travel? Does anybody see a kind of growth in those more kind of secondary cities?
Absolutely. The surroundings of Berlin are basically sold out. And that very much depends on public transport links, interestingly. So the idea of queuing in the morning somewhere in Potsdam to get on the highway to get to Berlin city center is not very, very tempting, I guess.
Okay, so you're already seeing that. It's interesting.
Yeah.
I just wanted to pick up on challenges for people that they're seeing in the market. So in terms of the sort of biggest concern, Philip, I suppose, what are you seeing as the main challenge for you as an investor looking at the market at the moment? Is it the sort of lack of product? What's keeping you awake at night, Philip?
I think the pace in Germany of vaccinating people drives me nuts, to be honest, because it triggers some consequences. Yeah? I mean, as we all know, buying real estate, you would like to do a physical visit of the asset before you buy it. You would like to discuss the assets and bring investors, obviously, to the assets. And that's at the moment not really possible, only in very rare spaces or opportunities. And that obviously is for all of us a difficult time to do our business as we used to do. So from that perspective, it sounds very simple when I say the vaccination speed is essential, but clearly it is essential, and it will have some effects in the future. Yeah? So that's, I would say, one of the key items.
I wanted to give everybody a chance just to kind of synthesize what they see as the biggest opportunities at the moment, the biggest potential for growth, where they're seeing the opportunities in the German market. Let's start with you, Thomas. So what are you seeing as, I suppose, key opportunities, looking at all of the trends that you've mentioned there?
My personal view, my personal favor is, of course, buying older buildings with a clear value add strategy and recycle them into newer concepts. Could be high street retail into multi-use, and of course with the ESG component, and produce dark green products under Article 9 with that. I think that's something where the flight for capital is even bigger than on the other asset classes. And there's a big need, it's a big market in Germany where we have with assets we just have to recycle.
Great. Holger, what's your kind of view? Where are you seeing the opportunities at the moment? Both I suppose, from a finance point of view and a market point of view.
Yeah, I'm sort of excited and I'm optimistic, Richard, because I'm very excited and how to see how quickly everything has adjusted to the new normal. So it seems that even the real estate sector and banks are flexible enough to adjust if needed. And I'm optimistic going forward because the whole discussion we are having about ESG now, about sustainability, etc., that is something which has been overdue for a long time and is now going to get much more focus, and hopefully it's going to be a lasting trend. I'm very agree with Thomas. Transformation of existing assets is going to be something very important going forward, and we just need to look to the Netherlands. From at some point, I think from 2024, they're not even allowed to let old buildings anymore if they have not certain energy consumption levels, and that's going to come. Yeah, climate change is a fact, and that's why we better get on with it.
Okay, great. Christian Schueller, what are you seeing, I suppose, as the big opportunities?
The hospitality sector has just still great challenges, but also amazing opportunities ahead. So many great assets are just lying unused, coming to the market, and where you may have a one-time opportunity to buy a great hotel next to Gendarmenmarkt in Berlin, even with a discount. Well, you know that you don't have cash flow for the next couple of months, but at certain locations, things are going back to normal, that's for sure, at one point in the future. I think we need to be quite careful if it comes to business hotels, because I don't see this rebound for business travel to a pre-COVID level in the next years. But pure leisure hospitality concepts, it's going to be overcompensated almost. So if you're able to buy a good hotel with an operator who can survive the next couple of months, I think that's certainly a good bargain right now.
Okay, great. And Christian, from Waterway's perspective, what are you seeing?
Yeah, well, I'd like to say in general, people shouldn't underestimate how far and how quick things are getting back to normal. Remember 2001, people thought that no one's gonna fly anymore. People won't build any high rises anymore. I mean, 20 years back looks like not the smartest comment, but people made those comments at the time. Look at 2008, the financial crisis, 2009, people thought business is never coming back to normal levels. And remember how quickly everything came back to normal. And I think this time is the same. People think there will be massive changes. I think you shouldn't underestimate the speed back to normal. Things will be normal in a few months' time. Profit now from the situation. Go into loan deals, look where sectors have issues refinancing assets, go into hotels. Also, I think business hotels, if they're well located, are also a good opportunity. So there are plenty of opportunities actually that present themselves right now. But I think in 6 months' time, it's going to be over.
Okay, great. So act now, Christian, would be your view.
Exactly.
Philip.
A hotel is one obvious thing which has already been mentioned. The other thing which I think is essential to look at and which offers a lot of opportunity is clearly the debt side of the overall industry. Because what we all monitor is that getting financing in some sectors is more challenging. It takes longer, and some banks clearly do not touch some of the sectors. And as a logical consequence, opportunities will arrive, and people want to take those opportunities. And if they need financing, they will go to alternative financing. And as you know, we within CORESTATE, we are a market leader, in particular in mezz financing. And this is clearly where I see a big opportunity for people to invest in and to make leverage of interesting investments.
Great. I think that's also a really interesting area, Philipp. Thanks again for joining us. Really interesting session. Thank you to the speakers, and look forward to seeing you at the next event. Thanks very much. Bye bye.